Mark Bunting at DX3 Canada. Joining me now is Karn Saroya. He is the co-founder, or a co-founder, and the CEO at Cover, and he's right here. How are you, sir? Nice to see you.
I'm good. Thank you for having me. I appreciate it.
Absolutely, and nice to see you. So, easy, obvious question off the top. What is Cover? Describe it. What do you do?
We're a multi-line national property insurance entity in the United States. So people download our apps. They answer a couple simple underwriting questions, take pictures and videos of things they want to insure, and we get them insurance.
And you're primarily in the States, right?
That's correct. So we're in 49 states.
All right. And so how long is it taking you to sort of build that out into 49 states?
Yeah, interestingly enough, so we started out at Y Combinator about 3 years ago, and over the course of a year, we built out a national insurance broker. So we worked with 30 insurance companies in 49 states in the course of about 8 months. So fairly non-trivial thing to do. Since then, we've moved to underwriting some of our own products and are on a trajectory to becoming a national insurance carrier of our own.
So tell us about, and tell me if I'm wrong in saying that the insurance industry in general, like others, are maybe kind of stuck in its ways and maybe slow moving, and am I right in saying that, and how do you think you're disrupting it?
I think you're right in saying that. I mean, you can think of the insurance business as three discrete pieces. Distribution is where we started, underwriting, pricing, and claims is where the products are actually designed. And then claims is a third piece, and regulatory overhead, where you're interfacing with an insurance company in some of the most catastrophic circumstances potentially. So along each of these three businesses, there's an opportunity that's ripe for us to interface with customers in a more seamless way. On the distribution side and on the underwriting side, getting to our customers via channels like mobile that they otherwise wouldn't have been targeted from, and because we're a tech company, squeezing our expense ratios and offering very competitive pricing to our customers. And then again, on the claims and servicing side, creating experiences like instantaneous claims for windshield damage or minor things where severity is low but frequency is high, that traditional insurance companies just haven't gotten their heads around.
So is this the kind of market that is not winner take all? There's room for everybody, plenty of room for cover, and it's a big addressable market?
There's $500 billion in insurance premiums written in the United States, just in property every single year. There are hundreds of admitted insurance companies in the US, many of which are privately held and low-key billion-dollar companies that still operate on paper processes. So, you could carve out a niche for motorcycle insurance or workers' compensation or what have you. So it tends to be relatively fragmented. The largest carriers, Geico, State Farm, Progressive, there is concentration up there, and inevitably what you see with those particular carriers is they play across the entire spectrum. So they're multi-line, they sell auto, home, pets, jewelry, electronics, just like we do, and we consider them competitors.
So you see Geico as a competitor. There must be some other companies similar to you doing the same thing. Do you concern yourselves with them, or you just stick your head down and you go for it?
I think we really only concern ourselves with Geico and State Farm. There are lots of technology companies doing very interesting things in insurance, but from a pure written premium perspective, tend to be relatively immaterial. They're attacking the insurance business, the three pieces of the insurance business, either simultaneously or one at a time. And I mean, more power to them. They're just going to push the industry forward.
So for those who don't know, tell us about your previous experience in the technology area and entrepreneurship and how that's helping you here.
Yeah, so I came from my prior business, StyleKick. We sold high-end fashion on the internet, so it was a marketplace where we sold high-end fashion. We were building very sexy products in a very sexy space. Grew that to about 1 million active users. Ended up joining Shopify to run a mobile product team there. Left Shopify to join Y Combinator 3 years ago. Did very well since then, and now we're building sexy products in a very unsexy space. Prior to that, I was a management consultant at Oliver Wyman in their finance and risk practice. I'm a CFA. Went to MIT. So we kind of sit at the intersection of folks that can build compelling consumer experiences, but at the same time understand insurance intimately well.
Great stuff. Thanks, Karn.
Thanks for having me.